The Trustee's Guide to Trust Accounting Duties. In California, trustees have a duty to keep beneficiaries reasonably informed about the trust and how it's being administered. As part of this duty, trustees must provide the beneficiaries with an accounting of the trust assets, showing how those assets have been used. What is a petition for accounting? A petition for accounting is a request by a beneficiary asking the court to order the trustee to provide a detailed summary about the trust assets. The trustee is required to give an accounting of the trust to all beneficiaries that provides information about how the trust assets have been managed. When a beneficiary demands an accounting in writing, the trustee has 60 days to provide that accounting. If the trustee fails to produce an accounting within those 60 days, and an accounting hasn't been provided in the last 6 months, then under the probate code, the beneficiary has the right to file a petition for an accounting with the probate court. That petition will simply ask the court to order the trustee to do what they're required to do, provide an accounting. What are the legal trust accounting basics? The most basic definition of a legal trust accounting is the bookkeeping required for trust accounts under state law. The California Probate Code provides that a trustee has a duty to keep the beneficiaries reasonably informed of the trust and its administration. Generally, trustees are required to provide information about the assets in the trust and how those assets have been used, at least once a year, as well as at the termination of the trust or whenever a trustee changes. How should a trustee account to beneficiaries? California probate law requires a trustee accounting to beneficiaries to include the following information regarding the last complete fiscal year of the trust or the time since they did their last accounting. 1. A statement of receipts and disbursements of principal and income that have occurred. 2. A statement of the assets and liabilities of the trust. 3. The trustee's compensation. 4. Agents hired by the trustee, their relationship to the trustee, if any, and how much they've been paid. 5. A statement that the recipient of the accounting may petition to obtain a court review of the account and the acts of the trustee. 6. A statement that claims against the trustee for breach of trust may not be made after the expiration of 3 years from the date the beneficiary receives the accounting or reports disclosing facts giving rise to whatever claim the beneficiary might make. How often do trustees need to account? Under California probate laws, trustees must account to beneficiaries annually, or at the termination of a trust, or upon the change of a trustee. Trustees must also provide an accounting within 60 days upon written demand by a trust beneficiary. What is trust accounting income? Trust accounting income is a formula used to determine how much income from the trust is available for the trustee to distribute to beneficiaries. Trust accounting income is calculated by adding all of the trust's sources of income together and then subtracting expenses. The trust accounting income formula will be used to prepare the trust tax returns in certain situations. Can trust beneficiaries sue a trustee? Sure, trust beneficiaries can sue a trustee. Trustees have a legal, sometimes called a fiduciary, duty to manage the trust for the benefit of the beneficiaries while also acting prudently with skill, care, and caution. Because of this fiduciary duty, trust beneficiaries can sue a trustee if they believe the trust is being mismanaged or that the trustee has breached some sort of fiduciary duty. Some common examples of reasons why a trust beneficiary might sue a trustee include 1. Trustee theft or mismanagement of trust assets. 2. A trustee failing to distribute trust assets or provide an accounting. 3. Trustee self-dealing or other conflicts of interest. 4. Trustees paying taxes late or incurring avoidable fees and charges. These are just some examples. To insulate themselves from lawsuits by trust beneficiaries, we recommend that trustees keep detailed, accurate, and accessible records that include documentation of every transaction conducted and their time spent on trust administration. Trustees also would be best served to keep a log detailing the reasons for their decisions and ensure they follow the instructions contained in the trust instrument. When should a trustee contact a trust litigation attorney? A trustee should contact a trust litigation attorney immediately if they've been accused of any sort of wrongdoing. While hiring an attorney when first appointed can help trustees avoid lawsuits in the first place, if you're already being sued or threatened with being sued, Contacting an experienced trust litigation attorney is going to put you in the best position to protect yourself. We also recommend that trustees retain an experienced trust lawyer as soon as they're appointed, particularly if it's their first time serving as trustee. That trust administration lawyer can help explain what the trust requires them to do, what the law requires them to do, and guide them in the proper administration of the trust. Have questions? At RMO, we protect people like you every day. Give us a call, shoot us an email. The consultation's always free. Thanks for watching.